Hello and a very warm good afternoon. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. We'll begin with markets as usual. To my left is my colleague Suyash Maheshwari. Suyash, markets ending on a flattish note after an all-time high this morning.
Yes, Shweta. So after opening at record high levels, the market paired gains and traded majorly flat for the majority of the session. But one of the good things which augur well for the bulls is that Nifty managed to hold the 20,000 mark for the majority of the session and also ended above the 20,100 levels, which is the highest closing for Nifty, all-time high close for Nifty. Okay. Now, mid-caps and the small-caps indices outperform the market, and both Nifty mid-cap 100 and Nifty small-cap 100 closed with gains of over 1%. India VIX, Shweta, which is a volatility index, the fear index, which tells us about how much volatility is there in the market, declined by about 4% and was below the 12 mark, which suggests that volatility in the market is below the average volatility in the last 30 days, which perhaps augurs well for the bulls.
All right, and perhaps good news there for investors, for every person who's been watching and looking at these recent developments, at least developments in the past 6 straight trading sessions on the Lal Street. Gaurang Shah, I'm given to understand, has joined us at this point in time. Gaurang is here. Gaurang from Geojit Financial is joining us on the show. Gaurang, good to have you back. I want to begin by asking, what is your expectation of the markets from here on? I think it's reached an all-time high. I think what happens here on is going to be a bigger Pandora's box that will unravel itself and all eyes will be on it.
Thank you, Shweta, for having me on the show. So, you know, when there was extreme pessimism on the Indian markets, we at Geojit still remained optimistic, even during COVID, post-COVID. Even right now, despite the fact that we've made a new lifetime high on most of the indices, sensex, Nifty, Bank Nifty, sectorial indices. And I'll just give you certain dates and certain levels, Shweta, so that there is a little bit of clarity of what we are speaking about. On 1st of September, and we were at, on the Nifty spot, on the 1st of September, we were at 19,260. And here we are, on 14th of September, we've made a new all-time high. So in a matter of just about 13 or 14 odd days, you have gained almost about 900 points plus or 1,000 points very soon. In that kind of a time frame, if you go up like this, then I think it's only, you know, advisable to expect a little bit of consolidation, let the market take a breather, and then we'll start moving forward. So 20,000 for me was just a number. I think we are preparing ourselves for much, much higher levels from going forward from here on. And the way the macro data points that we have on our side, I don't think that it will be very, very late for us to reach those levels. You might get some days of correction, consolidation, profit booking, which is always healthy for the market, Shweta. But there are much, much more higher levels that we have to see and witness as we go forward from here on.
Hi Gaurang, Suyash. So we had Mr. Ambrish Balega this morning. He was of the opinion that Nifty could soon climb to 21,000 levels. What's your view on this? Can we climb that 21,000 levels in a couple of months' time?
I'm sure can would not be a question. I think if is the question here. If and when is the question here.
No, so Shweta, to answer Suyash's question, I think we have to believe in ourselves. Let's face it. And we don't need any foreign brains to tell us what are we capable of and what is our capacity. We know it very well. And my sense is that why 21,000? I'll talk about 25,000, Suyash. And I think that will also be a reality. Just need to give a little bit of more time. But, you know, I was doing a little bit of calculations. I took 12% return on Sensex and Nifty, compounded it for the next 3 to 5 years. I was not surprised with the number that I saw at the end of the 3rd and the 5th year. I think even you guys do it, you will not be surprised. So I think there are much more elevated levels that we have to see. G20 summit that has concluded has opened up tremendous amount of opportunity, not only for India, but also for the rest of the country in this part of the world. So 21,000, then we'll talk about 22,000, then we'll talk about 25,000, Suyash. And I think this is a reality. The only thing is we have to believe in ourselves.
All right, that is a whole lot of optimism. Last time around, we had a guest saying it's going to scale 20. It did in a week's time. You're saying 25. Hopefully, that will come through as well. But what should be the strategy for investors at this point? Should they wait and watch? Should they wait for that consolidation? Should they invest now? I think a lot of young people perhaps also hoping to ride on the wave. Should they ride on the wave, or should they be cautious at this point?
Well, you should know how to treat the waves if you want to ride those waves.
Okay.
And the sad part, Shweta, is that most of the people who want to come in, especially the millennials, they want to look at market as a quick, buck. That's not how it is. If market was to make everybody wealthier and richer and a crorepati, then we would not have poverty in India or any part of the world. So I always tell all the young investors that please accept the fact that equity markets investment is exposed to all kind of risks, internally, externally, locally, globally. And if you are prepared to accept that risk, then only you get high return. Without high risk, there is no high return in equity market. So, and this market has an history, and history is witness to what we are talking about right now, Shweta. So instead of just waiting out, take the plunge. Go and invest into the market. Don't put all your money at one time. Be disciplined in your investments. Phase out your investment. Use all corrections as buying opportunity. It was just day before yesterday that everybody was talking about how everything is over for the small and the mid cap universe. But they did make a comeback. So primarily look at large caps because they are well-defined names, they are well-defined managements, they have proven track record. And only if you understand the mid and the small universe, try to venture to go out over there. Otherwise, there are a lot of stocks in the large cap universe where you can invest.
Gaurang, talking about mid and small caps, recovering after Tuesday's 3 to 4% decline. A lot of investors, experts actually, were talking that, perhaps the focus will now shift to large caps from the mid cap and the run is finally coming to an end. Yet, in the last two sessions, we have seen broader markets outperforming large caps once again. So, what's your view on mid cap? Was it a temporary blip that we saw on Tuesday?
Suyash, the kind of run-up that mid and the small universe had, I think it was only prudent to expect that kind of a correction. And again, history is witness. Whenever there is correction in the markets, small and mid cap are the first ones to take on the chin. I also heard about a lot of people writing obituaries about mid and the small cap universe. I'm not saying that mid and small cap the run is over. No, I absolutely don't say that. There are a lot of stocks that we as a brokerage house at Geojit Financial Services cover in the small and the mid cap universe. The only advice is that don't expect to buy anything and everything in the small and the mid universe and expect to make 20, 25, 30% return. That's not going to happen. You need to be absolutely focused on sectors and then make a choice in your small and the mid cap universe. Otherwise, like I mentioned, large caps are always preferred. But I don't think, with the kind of run up that mid and the small universe had, it was only prudent to expect this. And, give me a reason, Suyash, why did Vodafone go up 10, 12%? Was there any reason? It was only liquidity. And people were trying to find, value in stocks which had not contributed. That's what, it's basically as we call it in the market. It was a suckers rally. A lot of weak hands had gone into the market. With that kind of a correction, I think there is a lot of cleansing that has happened.
In fact, talking about, locked of weak hands playing a part in the market, the retail participation had climbed to an all-time 19-month high or so last month. But foreign investors are still missing. What are they waiting for, Gaurang?
I hope wisdom prevails upon them. Because they sell at 15, 16,000 and they come at buy at 20, 21,000. What kind of wisdom is that? I fail to understand. But forget about foreign investors. I think this is just the beginning. This is just the top of the pyramid, Suyash. I think, and the way, we conduct a lot of investor awareness programs. 3-5 years back when I used to conduct IAPs, that is investor awareness programs, the awareness was very, very low. Now, after 5 years, the kind of awareness that, a small investor or a retail investor has, it's humongous. And that's all thanks to the kind of information and knowledge about stock market. And people are, growing their knowledge over there. And people want to become the part of the India growth story. Either you come directly into equity markets and invest directly, or you accept SIP mode, wherein you have a systematic investment, platform to invest in. But and FIs will eventually come. No chief investment officer can afford to sit on cash when you have an economy like India giving an opportunity. And where else do you get 6% plus GDP growth rate? Please identify one country. I'll be too happy to accept that.
Okay, fair enough. Let's also quickly take a look at some of the sectors we're tracking this afternoon.
Yes, Shweta. So all sectoral indices on the NSE ended in today's session, barring Nifty, FMCG and media. All of them ended in green. Auto, realty, PSU banks were up about 1% in today's trade. Banking index, Shweta, is just climbed the 46,000 mark for the very first time since July. And it's just about 300 points shy of its record high levels. So perhaps there is an opportunity over there.
All right, and PSU Bank up almost 1.64%.
And this is on the back of 4% rally that we saw yesterday.
The rally, absolute rally continues. What's driving PSU banks? I mean, I think we did discuss this in the afternoon yesterday, Gaurang, with another guest. The kind of returns that perhaps PSU banks have given, and this is being attested to not just by us as observers and you as analysts and guests, but also the government perhaps noting that PSU stocks are the stocks to watch out for.
So this is purely because of the government doing things right for this PSU, companies. Whether it is defense, whether it is oil marketing, whether it is oil exploration companies, whether it is defense, whether it is power, whether it is railways. I think policies speak a lot, and that opens up opportunity for these entities, including banks, Shweta. So we remain optimistic on PSU banks. We are optimistic about PSU defense, power generation, power transmission, railway stocks, oil marketing companies. I think that green hydrogen is going to be a major game changer as and when we have these things getting implemented at ground level. And including oil exploration companies. And especially for PSU banks, Shweta, they have been laggards. There's no denying about that. Take a look at State Bank of India, Canara Bank, Bank of Baroda, PNB, stocks that we cover fundamentally. They started to move now. And I think, and it was nothing to do with the earnings. Earnings for this financial first quarter was much better than what our estimates were. Even last financial year, the earning was equally better. And now going forward, because of the credit demand, our sense is the entire banking universe, along with NBFCs and microfinance companies, is likely to deliver. So we remain optimistic about PSU companies, whether it is banks, defense, power generation, transmission, railways, or oil exploration, and all marketing companies.
Gaurang, I also want to touch upon metal stocks. I think some of the metal stocks were among the top gainers in today's session. Even the Nifty metal index went up about 1% in today's trade. Now the expectation is that demand recovery will augur well for the metal stocks. But the metal index in the past 6 months has surged about 25%. In the last month it's up about 9%. So do you think that the expectation of a recovery has already been priced in, or is there more room for another up leg?
So Suyash, there are a couple of things which had actually an overhang on the entire metal pack. Be it in terms of input cost, be it in terms of pricing of flat and round products, or be it in terms of one joker called China, which always has an overhang on the metal pack. But we remain optimistic about the domestic story. And if you are going to have the kind of infrastructure spend that the government has lined up at pan-India level, or the spending at state level by the state governments, recovery in the real estate sector, and along with that, you have the capex, coming through at a much better speed. So if I have to put all these things, and now of course the input cost has come down, margins are getting better as far as profitability is concerned, and consumption demand locally is going to look quite robust. India also has an opportunity as China plus one, Europe plus one kind of an advantage, but it remains to be seen how the raw material input cost pans out to protect the margins and to report profitability. But we remain positive on the metal pack.
Gaurang, also I just wanted to get your view on the sugar stocks. Now they have been on a roll lately. Stocks like Balrampur Chini, Dalmia Bharat have, I think, surged to a 52-week high. Now there was a report yesterday from DAM Capital which initiated coverage on several of these stocks with a buy rating. Also sugar prices are at a 6-year high. But then we also saw that government asked several of these of the mills and the companies to take stock of their output, which created a downward pressure on the stocks. So what's your overall view on the pack, on the sugar stocks?
So I'll comment on the sector. I won't comment company specific, Suyash, over here, because we don't have any coverage on the individual names as far as the sugar sector is concerned. So it's a sweet spot, let's say. But along with that, Uttar Pradesh, Maharashtra, and Karnataka, these are the three states which are the largest producer of sugarcane. And because of the deficit rain, the crop as far as sugarcane is concerned is going to come quite lower, which may impact sugar production. And that will also impact production of ethanol, because ethanol is a byproduct while you make sugar out of sugarcane. So, and of course, certain news flow in terms of export ban, etc., had a little bit of overhang on the sector. But opportunity is tremendous. Pricing of sugar, pricing of sugarcane, debt on the balance sheet, and of course, one silver lining is the pricing of ethanol per liter. So the sector looks good. I would only advise that look at fundamentally strong companies which are lower or no debt as far as investment ideas are concerned.
But now, since sugar prices have surged to a 6-year high, do you expect some sort of a government intervention as far as the prices go?
It will definitely come through, because government doesn't want, look what happened to tomato prices. And because of that, where the inflation went as far as food and agri products and vegetables are concerned. So, and even for rice, there was, I think, a ban in place. I don't know if it is still there or not. So whenever you
It
will
actually
see,
is. There's still
Thanks.
continue to be an export ban on non-basmati
so-
white rice.
Yeah, thanks, Shweta. So that means government will take appropriate steps to rein in inflation because of certain lower production or because of deficit production. I think appropriate steps would be taken.
All right, and the big news trigger, of course, as Gaurang pointed out, is that there is rain deficit, and we talked about that story yesterday, on the back of deficiency in rainfall of sugar-producing state, including state of Maharashtra, which produces 1/3 of the total overall sugar output of the country, will result in perhaps sugar output declining, and this is going to be perhaps the worst year in last 4 years, will have an impact not just on stocks but also on the overall sugar output, could perhaps also result in government taking intervention measures by way of banning export. We don't know that just as yet, but that of course is something that not just people but also government and the industry will have to brace for. But we continue to track other stocks this afternoon, Suyash.
Yes, Shweta. So let's move on to the gainers and losers
Yeah.
in today's session. So among the gainers was UPL. Now UPL is one of those stocks, Shweta, since March low. 49 out of 50 Nifty stocks participated in the rally. UPL was the only stock that was in the red during that period. Now the expectation was that the company's debt reduction targets will not be met. Also, the company itself had cut, the target price of the stock. But today, UPL was among the top gainers. It soared as much as 4%, nearly 4%, after brokerage firm Antique Stock Broking upgraded the stock to buy. Another stock that was in the news today was Hindalco. As we talked about, metal stocks were in action today. Hindalco recovered and was up about 3.3% in today's trade on the back of expectation that the China's construction sector will recover. Mahindra & Mahindra was another stock that was in focus today. It was up about 2.4% amid a rally in auto stocks. Also, brokerage firm HSBC has raised the target price on the stock to 1800, which implies a upside of about 14.5% from current levels. Other stocks that were in focus today were ONGC and DV's Lab. Now talking about the losers, Shweta. So Asian Paints slipped over 1% in today's session after there were reports that Grasim is looking to enter the paint business. So perhaps the market is taking cognizance of the fact that there will be increased competition for a major company like Asian Paints. Other losers in today's session were HDFC Life, which was down about 0.97%. Then there was Coal India, which has been near its 4 years high. So perhaps some profit booking we are seeing in Coal India stock. Britannia and LTIM were other stocks that were in focus today and among the losers in today's session.
All right, those of course are the big losers in today's trading session and stocks that we continue to track here on News9. Gaurang, before I let you go, perhaps a commentary on where do you see the market heading from here on? At a record high, at an all-time high, everybody is hoping to know what's going to happen next. I know there is the genie's out of the bottle just right now. It can't be put back in the bottle, so you can't predict, you can't say what's going to happen for sure. But what is your expectation?
So, Shweta, just before I comment on that, I think one particular pointer on the sugar pack that we were discussing is the
Yeah.
festive season and the demand for sweetness. I think there's going to
Yes.
be heavy demand for sugar because of the festive season, so that might keep prices elevated and appropriate step would be taken. As far as markets are concerned, Shweta, I think a couple of a word of caution as far as crude oil above $90 a barrel Brent and $88 a barrel NYMEX, rupee closer to 83, and deficit rainfall. These are the three things that I am a little bit concerned in immediate short to medium term. But if you ask me, I think I'm preparing myself for levels much higher than 21,000 on the Nifty.
All right, of course. Festive season around the corner. A lot of triggers there that one has to wait and watch out. But remember, there's going to be more need and urge for sugar, and sugar perhaps is going to be in demand for a long term.
In a sweet spot, as
in
Gaurang
a
put it.
sweet, in a very sweet spot, as Gaurang put it. Gaurang, thanks very much. Always a pleasure talking to you. Thank you so much for taking time out.